There's the Bitcoin dominance chart. It looks to us like it's forming a head and shoulders top pattern, which would break lower. That would be very typical of this stage in a bull market. And in which case, things like global M2, Bitcoin won't track as well, but the overall space will track it really well. And you'll see the acceleration of assets. So we've had ETH as the main beneficiary, which makes total sense. Everybody was massively underweight. As the wealth in this space, I think it goes from $3 trillion to $100 trillion over the next 8 years. That'll be the largest accumulation of wealth in history. And wealth always flows upstream. And so what we're seeing is as ETH goes higher, the prices don't adjust down, which is what people thought happens. What actually happens is wealth creates demand for this stuff. So this stuff is ripping.
Macro investor and Real Vision co-founder Raoul is doubling down on his call for the next great crypto bull run, a rally he believes could last well into 2026. In his latest market breakdown, Powell says all signals point to a massive acceleration point that's turning up as we speak. Historically, this has fueled massive price gains across the entire crypto market. But here's the twist. Powell warns that Bitcoin dominance is topping out, which could set off a rotation into Ethereum and other major altcoins. And ETH, he says, is perfectly positioned. Now institutions and mainstream analysts are floating price targets once believed were impossible. Bitcoin is currently sitting just above 116,600, still up over 7% in the past month, while Ethereum sits just over 4,300 after a strong run. Powell believes these numbers are just the beginning, with Bitcoin breaking through 120,000 again soon, and ETH heading toward uncharted highs as adoption accelerates. The bottom line, if Powell's liquidity thesis plays out, we're on the edge of phase 3 of the banana zone, a high momentum phase where prices can go parabolic. And for him, crypto remains the single best bet to outpace currency debasement. Let's get right into the latest interview with Raoul Pal, as he gives his latest crypto market outlook and why he says the bull run is only getting started. Drop your comments down below and subscribe if you enjoy the content we do here.
Okay, so you're new to crypto. Welcome to crypto. Bitcoin, I can't buy that. It's $116,000. I can barely afford lunch. Ethereum, well, that's pretty expensive. Oh, but XRP, I've heard about that. I saw some videos on YouTube. It's $3. BNB, well, I don't really know what that one is. Solana, $175. Oh, but Doge, Elon likes Doge. It's 22 cents. And Cardano, I've seen tons of videos. It's 78 cents. You can see what happens because we've all done it too. So that's my general thesis, that the anchoring bias of price is a real thing. And look at the top 10 because you think you've de-risked it. There's the M2 chart, and it's lagging a bit, but it has these leads and lags. We shouldn't expect it to completely follow squiggle for squiggle, because in which case it's just doing debasement and not network adoption. But it's this kind of period here where we should be turning up and seeing the acceleration point. You know, did we play catch up? Most likely. So it feels that, yes, there's been a slight lag. Is there any major structural issue there? No. This is Bitcoin, and as we know, dominance is going down. So dominance changes this somewhat, because what we're going to see is the other assets doing it. Now, Robinhood, could they have chosen Solana to build on? Yeah, but they chose an ETH layer too. So look, I've never had an issue with ETH, and yes, it underperforms over periods in time, but it was like, you know, this is the core foundation stone of Web3 is ETH, and everything else kind of builds around it, you know, Bitcoin being a separate beast. So what I had done is, we've talked about this before, the second cycle trade where somebody's got Lindy effect and you buy it, which was Solana at the low in 22, is usually the best trade of all because it's kind of been de-risked. And then people have the light bulb moment, which they're having again with ETH, right? But ETH has gone through that Lindy effect in the past. And I'm like, this stuff is survived the Lindy effects. There's a group of collectors who passionately care about Xcopy, Beeple, whoever it may be, Sam Spratt, all of this stuff. And that this stuff is likely over time, as the wealth in this space, I think it goes from $3 trillion to $100 trillion over the next 8 years, right? So it has always been a proven store of value. You know, I think the stuff that I started buying in 2024, early 2024, is up between 3 and 5x in ETH terms and then ETH is up another, whatever X, depending where you bought them. So they become this massive multiplier trade. I've said this for a long time. And I mean, as you know, my main bet has been SUI for a while, and before that was Solana. Those rotations have done well. SUI still generally outperforming Solana over a longer term basis. I think the next phase of Bitcoin dominance, we're seeing the ETH rotation trade. That's good. The catch up is happening. Okay, once it gets into kind of mid value versus Bitcoin again, then I think we'll see the rest of the space utterly ignite. And as we know, once you throw in a lot of liquidity into lower free float things, they go up more. And that's how it always plays out. And that's where we are in the cycle. Now, one of the things on the macro side that we look at is the influence of the business cycle on that particular trade. And it's the same trade you and I have grown up with in markets, is earnings have to go up for people to go further out the risk curve. So when the ISM picks up properly, the business cycle picks up, corporates and people earn more. And what we find is, in the bond market, it goes out to junk, then out to emerging market junk, and then out to private credit. We see small caps outperforming big caps in equity markets. We see all of this, and it's the same with the altcoins. The issue is everybody thinks their altcoin should go up. That's the issue. Is it's like everyone's like, well, mine hasn't gone up, so therefore this is all wrong. It's like you need to have the right altcoins, and I think people mid-curve it. They get so involved in the value benefits of their particular token, when really there's one simple thing: is go onto CoinGecko or CoinMarketCap and look at crypto. And we've talked about this. It's like, I'm sorry, but people are going to buy XRP and Doge and Cardano, whether you like it or not, because they're cheap. In the absolute term of how much you pay for a token. So people will do that. The alt layer ones that are getting absolute network adoption, Solana, SUI, few others, great. And then somewhere in the middle, we'll see what happens. But I think the middle part is the harder play.
We're now in the part of the cycle where global liquidity, measured by the M2 money supply, is starting to turn higher. Historically, every major Bitcoin rally has followed this same pattern, with prices accelerating a few months after M2 begins rising. Raoul Pal says that correlation isn't coincidence. Liquidity is the single biggest driver of crypto markets. As M2 expands, capital flows down the risk curve, first into Bitcoin, then into Ethereum, and eventually across the entire altcoin space.
So when you speak to friends now, some people got bored in crypto over that period of sideways consolidation. They're all punting options on tech stocks, right? So the speculative fervor and the confidence that I can make money in this because everything's trending because of the debasement and everything else, and we've got some mega narratives like AI, makes it pretty easy game to make money in. I've had this everything code thesis for quite a while now, but generally speaking, the crypto space has understood debasement of currency versus inflation, which is what TradFi thought of. And we've been on this trade saying they need to refinance the debt. That's the whole everything code thesis. And here is Scott Bessent coming out saying publicly, we need stablecoins to refi the debt. Trump saying we need the Fed to cut rates because we need to refi the debt. The whole game is now open. They're telling you what the game is. And there's still a lot of TradFi people who don't want to understand it because debasement's not a thing that was taught at university. What beats the debasement? Debasement's about 8% plus a bit of inflation, whatever. So call it 10, 11%, 12%. Well, the S&P does that. So that doesn't help. Gold does a little bit less, so that doesn't help. So you've only got actually two assets in the world that outperform the debasement of currency. One is technology stocks and one is crypto. When you divide the NASDAQ by Bitcoin, it's down 99.997%. So it's like, okay. Then when you put the correlations of the long-term drivers of the asset prices, 97.5% of the NASDAQ is explained by debasement, liquidity, and 90% of crypto. So you've got the largest dominant factor in the history of macro markets over the longest persistent period of time since 2008. So you basically only need to care about one thing, that. And the other side is how fast is it being adopted, which is why it outperforms the debasement. So in which case you've got only one macro factor that matters, which is why I keep saying to everybody it's all noise. Nobody cares because it's And 90% of all price movement is explained by one factor. If it's crypto, then all you need to do is look at what is the strongest performing chart, let's say on a weekly basis, and that happens to be SUI. So I just own that. But you could just own Bitcoin, or you could probably just own ETH, or you could own Solana, and you'll be fine. So you own one asset, so you don't have to watch this whole basket. And we've all run portfolios, and before you know it, you've got 10 positions that are losing money because you don't focus on them. So it's like, get rid of all of that noise. Then look what Bitcoiners did. The early adopters did nothing, and they compounded more wealth than anybody else in the shortest period of time, pretty much, apart from a few startup founders. So the signal's there, and then if it is one factor, then all you need to worry about is liquidity. That's it. It still feels like the market, if I look at the top 20, it still feels like it's not mature enough, really. So you've kind of got some weird stuff in there. But generally speaking, should work fine. The issue is Bitcoin's a bit too large percentage. You've got the issue of Bitcoin being a bit large, like MSCI World used to have this massive weighting of Japan, and everyone had to produce an ex-Japan version of it. So do you have an ex-Bitcoin version? So you can buy Bitcoin via an ETF and then have everything else ex-Bitcoin? And
yeah, that's an interesting one.
Because Bitcoin is a different beast, right? It's a network adoption model of a new collateral asset. Let's call it that. Well, the rest is really a technology that's being used for other stuff. My overall thesis is space is going from 3.5 trillion to 100 trillion. What's the easiest way to capture it? Well, I built an asset management firm, XPAM, because we invest in hedge funds, a basket of hedge funds. So it's a fund of funds to be able to capture that in the best way possible. And you'll capture that trend just fine. So you can make some really good money out of some of those tech plays. And so we've had some really good ones, but the bulk of my own personal capital, I just keep it in this. It's just easy. The likelihood is it's into Q2 2026. What we would look for from here is a further weakening of the dollar to give us more clarity of that, because it leads as part of financial conditions for a long basis. But probabilistically speaking, it looks like it's going to go on a lot further than people expect, just because the cycle's been extended because they kept rates so high so long. I mean, the reality is, outside of all of the noise, Trueflation is showing inflation at 1.75% and has done for the last several months, and rates are at 4.5%, wherever they are. I mean, rates need to come down 200 basis points, at least. Well, if that comes down, people have more disposable income. Meanwhile, the companies that they work for do better, because that's what the ISM going up means, which means people get paid more. That whole positive feedback loop is still to come.
Raoul Pal isn't just calling for a rally. He's practically waving the green flag on what he thinks could be the most explosive crypto cycle yet, running straight through 2026. All the classic signs are flashing: global liquidity turning higher, Bitcoin dominance stalling, and Ethereum sitting in prime position to lead the next wave. If history's any guide, we know what happens when the M2 money supply starts climbing. Capital races down the risk curve. The first stop is Bitcoin, then Ethereum. And before long, the entire altcoin market starts lighting up. Pal calls this the banana zone, the stage where prices don't just rise, they launch. Think parabolic moves, broken records, and price targets that used to sound impossible, suddenly looking conservative. So if Pal is right, we're standing on the edge of a once-in-a-generation window, one where crypto isn't just an investment, it's the single most powerful hedge against the relentless squeeze of currency debasement. The next chapters of this cycle aren't going to be quiet. The question isn't if the bull run will heat up, it's how fast you'll be ready to move when it does.